Duane Duggan, Remax Boulder Video Podcast. Today we have Jessica Shanahan from Premier Lending to talk to us about what is going on with interest rates and how it changes the buyer's purchasing power. So Jessica, thanks for being here today.
Thanks for having
Appreciate
me.
it. So right now, first-time buyers have it kind of tough, mainly because there is no inventory in the first place, especially in the city of Boulder, even out in the county. Prices are up quite a bit, and now there's pressure on interest rates. So compared to a year ago, what's it looking like the change has been?
Sure. So I think, you and I just did the math, and researched some interest rates, but from just last year, it's up almost a full percentage point. So from high threes to high fours is where we're at this year.
Okay.
And that changes a lot just on a loan amount of like $400,000. That's a difference of almost $250 a month in the payment. So pretty substantial.
And I was asking you before about what the percentage change in purchasing power is for every quarter percent that the interest rate goes up. So every time you see in the newspaper that the interest rate goes up a quarter, how much less purchasing power does the buyer have?
Yeah. So, and when I just did that math, it was based on sort of a perfect scenario. So the client's putting down, 20% and has good credit and all of that. Anyway, it came out to about 3% each quarter.
Each quarter percent that it goes up.
Yep.
So it amounts to about 10-12% lost when it goes up a whole point, which starts to be significant.
It does.
But the good news is rates have gone up relatively slow. I remember back in the 80s when they climbed all the way to 16%. So you probably weren't even born then yet. But every day I came into work, it was like the interest rate went up a little bit higher.
Yeah.
At least when you think if it's gone up a point over a year, it hasn't been so substantial. I mean, we don't want to create a panic in the marketplace by saying buy now because interest rates are skyrocketing. But over a year's time, a percent has made a difference.
Yeah, well, and exactly. I think we don't want to scare anyone, but also buy now because interest rates have gone up over a year. But a lot of that increasing was just in the last 4 months. Most of it was. So where you don't want to rush into anything, in a way you kind of do because properties values are also appreciating.
Property is going up, and then that throws into the factor about what the loan limits are, because in Boulder County, city of Boulder, values are high. And what are the conforming loan limits?
So national conforming is 453-100, and then Boulder has a special high cost county loan limit, which is 578-450.
And so right now, when I checked just before we did this podcast, the cheapest single family home in Boulder was right at $600,000 on Denton Street. And so at $600,000, even in the high cost limit, it's still you have to put 5% down. So that's still like $30,000 down.
Right, $30,000.
Right.
Yeah.
So that makes it pretty tough on first-time home buyers again.
Absolutely.
Do you foresee that they might raise that limit again to help in high cost areas, or are they already at their peak?
I would say yes, I think that they're going to raise them again, but I mean, new year, new administration or newer administration, I don't know for sure what they're going to do. They're high now, but as properties continue to get more expensive, I can't see that they wouldn't continue raising them.
We just did a podcast with D.B. Wilson, and he announced that the average price even in the county was $593,500. So comparing that to the loan limits for the county, it's still getting pretty tough without an increase in those limits, especially for first-time buyers that may not have that big of a down payment.
Right. It's kind of like in Boulder County, you're almost looking at a jumbo loan, really, because that's where property values are.
Okay, if somebody was to get a jumbo loan, can they get in with a low down payment?
They can get in with a low down payment. We do have some options for like a 5% down payment. And so that's going to be an ARM usually, so an adjustable rate mortgage.
Okay, and then with low down, then there's private mortgage insurance that you have to pay. Now on a jumbo, is that usually paid separate, or is that just becomes part of the interest rate that you pay?
Sure. So usually that's how we see it, is a lender paid mortgage insurance, which means you're taking a little bit higher interest rate because that mortgage insurance is sort of baked into the cost.
Okay, so a conforming loan's running about 4.78 right now. What's kind of the range for jumbo financing with that lender paid private mortgage insurance counted in there?
So we're looking at like 5.375 and up, I would say, for that lender paid mortgage insurance.
Right. Anything else, Dad?
think you covered it.
All right, Jessica, thanks for being here, trying to do everything we can to help our first-time buyers out, even though it's pretty tough. If someone wanted to get a hold of you to learn more about all these things we've talked about, how do they get a hold of you?
Sure. So the best way to reach me is at my office, 720-833-7964, or a lot of information online at our website, www.premierlens.com.
Thank you, Jessica. Appreciate
Thank
it.
you.
Duane Duggan, RE/MAX Boulder Video Podcast, signing off.